How are you guys doing? This is Ryan, welcome back to the channel. Today we're going to talk about how I am able to predict that the market has actually bottomed and also give you a Robinhood portfolio update. So I'm going to grab my crystal ball and show you exactly how I am very confident predicting the market bottom, which occurred this past Monday. Let's get into it. Alright, so this month we've seen a decline in the stock market of a total of 38% in about a month. And it is the fastest drop actually to occur in stock market history. It's just crazy when you say that the market has never seen a decline this fast. The entire market discounted by almost 40% in just a month's time. These are the same companies that they were a month ago, and everything's very different now. Just now they're worth 40% less. And if you're watching this, you're probably really confused. You're probably saying, Ryan, how have we hit a stock market bottom? The health epidemic that's going on in this country now is only getting worse. Italy just reported that nearly 1,000 people died of this health epidemic, and now the United States is the epicenter of this health epidemic. Sorry, I'm not gonna say the actual word because YouTube does not like that and they'll demonetize this video. So we're just gonna call it the health epidemic or pandemic. Pandemic's probably better. So the world is still getting worse around us. Businesses are shutting down, layoffs are happening. Shouldn't things be getting worse for the stock market? But yet since Monday, we've seen things get better. And I'm not saying we're out of the woods. I'm not saying we're back in a bull market by any means, but I think something very important occurred on Monday. And on Monday, I believe that total systemic risk was priced in and understood, and some investors felt more comfortable getting back in the market. When I mean some investors, and big money seemed comfortable to get back in the market, and we saw the market shoot up another 20% from its lows. Now I think we're likely to kind of retrace back, and I think we're likely to retest the bottom, but let me read you the definition of systemic risk. The definition I have here, I'll put on the screen, of systemic risk is, in finance, systemic risk is the risk of collapse of the entire financial system or entire market, as opposed to risk associated with one individual entity, group, or component of a system that can be contained therein without harming the entire system. So with the health pandemic, there was a risk to the entire system, and that's why the market went in such fast free fall. And there was no real plan, and us investors, me included, should have prepared for this better. We saw in China that their economy actually shut down, and we kind of naively thought that this wasn't gonna happen to us. So investors here actually have something to look off of. We can see what's happening in China and have expectations as to how we're gonna rebound. So that's kind of helping investors and big money understand the risk that we're about to walk into. And then our government actually took action. We passed a stimulus package, and bipartisanship came together and they passed this. And we're even starting to hear dates, like the president is saying possibly on Easter that we will see some things come back to normal. I don't know if that's true or not, this video's not about that, but we're starting to see, even though we're in the incline, we're walking into the pandemic getting worse, but we have clear guidelines how we're gonna possibly make it through a stimulus package and through the social distancing. There's a plan, so the system is less at risk when we didn't have a plan. When we didn't have a plan, there's a lot more risk associated. So we have a plan now, and also you have to understand that the market is a forward-thinking machine. So think about that. We're not pricing in the value of today's companies. Think about when we look at a company, we look at a price to earnings ratio, we're willing to pay multiples on that because we're gonna pay for future value that the company's gonna return to us. And let me put it in more basic terms. If you were gonna start a company or invest in a friend's company and you put that money in for a partnership, your investment wouldn't be worth as much today as it would in the future. So your investments are gonna be worth more over time, and you're gonna pay for that, and you're gonna think into the future while you're okay with making that investment. So again, the market is a forward-thinking machine. And I think a lot of people have missed this. And I do know some people that called the market right, that knew to get out of the market before the storm hit, and they still have a lot of time to get back in, but is a 38% discount just not enough? If your favorite restaurant had your favorite dish for 38% off, you would order it. I have a hard time understanding the mentality of, we have not seen big enough discounts yet in the market. I'm still too scared to put my money in yet. What are you gonna do? Are you gonna go chase the 10-year bond paying you 0.68%? American companies are gonna be a great place to store capital moving forward, and the government is gonna continue to make sure the stock market goes up. They will print and destroy their currency the entire way. So where are you gonna keep your cash? You can keep your cash in the best companies in the world, and companies with billions and billions, if not trillions of dollars in market cap. So I've been continuing to buy stocks. And the whole systemic risk factor is why I feel comfortable in calling a bottom in the market, even though I think we are likely to retest it. Markets don't usually let you out of the woods that easily. They're gonna punch you in the gut. You're gonna have a lot more volatility to come. But the worst is in. Could we go a little bit lower? Potentially. Yeah, but that really depends if systemic risk changes. If things just continue to get worse and we can never reopen the economy, sure, we're gonna go further. But there's an idea here, sometime in the next month or so, we might see life get back to normal. We might be able to go to a baseball game. We might be able to open our businesses back open, which has been extremely difficult for me. I now feel like I could weather any recession, because at least in a recession, I could still do some business. I would do less business, but during this pandemic, I can't do any business. If I can make it through this, I can make it through anything. And I feel pretty confident I will make it through this. With that said, that's the first thing I wanted to touch on. And the second thing I wanted to touch on was the Robinhood portfolio. And I wanted to read you guys a real cool quote that I saw that really has me thinking about my portfolio and investing philosophy overall. Unfortunately, I can't credit the correct person. I saw it written on Twitter, and I just screenshot it on my phone because I thought it's such a genius way to look at investing. As I go over my Robinhood portfolio performance, I am actually still up, and I'm beating the market a lot while going through one of the worst stock pullbacks in history. And it's because I do tend to sometimes follow this philosophy, not all the time, but I do think it's good for everyone to look at. And I'll put it on the screen here. It goes, trust me, you don't need risk management if you buy when you're terrified and you sell when you're euphoric. Even though I know all the right things to do during the market pullback, I still get terrified seeing tens of thousands of dollars erased out of my account. And I buy into the fear. I buy. And I'll talk about what I bought in the portfolio during the drop and what I continue to buy, because I still think even though we're not at the market bottom, we are still at discounted prices. And we'll probably go back more next week, but I'm not greedy. I don't need to buy at the exact bottom or sell at the exact top. But if I can buy heavy when I'm terrified and I can sell when I'm euphoric, I can make money. And I just look at the Tesla trade earlier in the year. When Tesla was doing horrible and no one wanted to buy it, I bought as much as I could. And then when everyone loved Tesla, I sold some. And in this market pullback, I got to buy back a little bit of Tesla, which is pretty fun. So, with that said, let's jump into the portfolio. I haven't been doing too much buying of new companies. I did buy 3 new stocks in the last month. The rest of it's been really beefing up other positions, companies that I love that I've wanted to have bigger positions in. So I'm not going to run through the whole thing, but we'll go over the cliff notes of the performance of the portfolio, just the Robinhood portfolio. I won't talk about my other accounts. They've gotten beat up, but they're just buying ETFs, so they're just following the broader market. This account is my attempt to beat the broader market. So this video is being recorded at the close of market, Friday, March 27th, and the current portfolio balance is $32,334.49. Today ended up in the red, but in the past week, I've actually rebounded 10.87%, and the portfolio's been able to make back over $3,000. Now, on the month overall, it's still very bloody. I am down 18.39%. Pretty rough. That's a total loss of over $7,200. Not fun. Let's compare that to the broader market. In the past month, the S&P 500 is down slightly more at 19.76%. And that puts me in the red in the last 3 months. But if you look back in the past year, I'm actually still up 4.65%, and that's even with today's sell-off. But if you've been following this account for a while, you know this account was actually around $36,000, and I was actually up 75% at a time. The market's funny. It'll give you a lot of gains, it'll take it back. You wanna make sure you're making over 10% annually. Or I always say just buy ETFs, which I do buy ETFs. I'm trying to become a better stock and asset picker. That's the whole point of this journey. So if you wanna learn how to do that with me, make sure you subscribe to the channel, turn on the notification bell, and actually please gently, if you've made it this far, hit the thumbs up button. It greatly helps this video reach a broader audience. I should have asked for it in the beginning, but if you're actually really enjoying the video, you've made it this far, so. So I've been loading the boat on more Facebook stock. I actually bought some more today. I want to make it a core position in the portfolio. I now own 14 shares at a dollar cost average of $172. J&J is another one I've been loading the boat on. I'm up to 16 shares at a dollar cost average of $127.54. I get really excited about seeing more dividends next quarter, pay on the annual quarterly basis. So that's really exciting. I nibbled on Twitter, I won't go over that. I mentioned I got 2 shares of Tesla. I was able to snag a little bit of BABA in the 170s. AbbVie I haven't touched. 3M's been a buy for a long time now, it feels like. I actually got them as low as $115. I now own 18 shares at a dollar cost average of $152.12. I nibbled on a little bit of Waste Management to average down my cost. I bought a little bit of CVS around $50. I thought CVS not gonna be that badly affected by this. And the stock price really hasn't had that much volatility if you compare it to some other players. But just a small nibble. Altria, same thing. I bought a little more Altria, beefing up those dividends. Disney. Before the market collapse, I only had 2 shares in a Disney. I'm now up to 9 shares. I bought 7 over the course of this crash. I now have 9 shares at a dollar cost average of $112.04. Who doesn't love Disney? I actually have a dream one day to, I told this to my wife, one day we're gonna take our grandkids to Disney World and we're gonna pay for the trip with our Disney dividends. That's gonna be a lot of shares of Disney, so, but we'll be old grandparents by then. What else do we have here? I bought some more Verizon in the low 50s, dollar cost average down on them. No Arcomotive for me. LTC Properties, I bought in very little in the mid 20s. REITs got really beaten up. I was able to buy some more O. I didn't get the bottom of O. And when I say O, I mean Realty Income. Boy, were they on discount. I kind of, that was kind of an oversight for me. What are you gonna do? Five Below, I bought 1 share today. Lower my dollar cost average. Nothing for Chemours. It now seems that this past week was the time to buy Carnival Cruise Line. It wasn't a very big position for me, but I think when the market was at all-time highs, it was very hard to find volume, and price to earning ratios were very high. So when I looked at Carnival Cruise Lines, I was attracted to it because it seemed like it was fairly valued in a market that was overvalued. But then a world pandemic happened. But I can tell you, some people are gonna make a lot of money that started loading the boat on Carnival in the $9 to $10 range. They're already almost 2x their investment. Wells Fargo, I feel like I have more time to nibble on the bank stocks while interest rates are low. Square, I bought a lot of Square. I'm actually up to 15 shares of Square at a dollar cost average of $58. They were another one that had bargain basement prices in the $30 range, which is insane. Pepsi, I've decided to make a core position of the portfolio. I'm now up to 16 shares at a dollar cost average of $127. PPL is one of my utilities. A little nibbling, nothing crazy. Applied Materials, I've been slowly adding them as well. I think they're a great company. My friend Citizen of the Year owns them. He's the one that actually brought the stock to my attention. Not a lot of people own this, but they're a huge player in making hardware for technology companies. Phenomenal company, small dividend. This is a regret here, Delta Airlines. When the market was crashing and the industries that were getting beat up the most were, theme parks, cruise lines, airlines, food purveyors, companies like Cisco and Darden Group. Those were some great companies to buy, and I should have focused maybe more on them. I kind of fell into, Buffett buying Delta, and it'll probably end up being a decent investment. I'm down a little bit on it, as you can see here. I bought it at 42 bucks, but I just am so upset that I'm investing in the airlines, which so mismanaged their business and had to come crying for a bailout to the government, to not be ready for a rainy day, to say, we messed up, we're gonna actually take on debt and restructure this and make it right. We're not gonna cry to the taxpayer. I'm embarrassed of that one, but what am I gonna do? That's one of my new positions. The other 2 new positions I got into, I picked up 3 shares of Microsoft at $137.98. I won another huge tech player that was beaten up, and boy is Microsoft a great company. It was between Microsoft or Apple, and I think Apple will continue to improve with different revenue sectors, but I do worry that Apple is, even though Apple's the greatest company in the world, they still feel like kind of a one-trick pony with the phone being the major player that drives it all. They do have other parts of the business, the AirPods, the MacBooks, and Apple will find other ways to innovate and buy other companies. They have so much cash, they're a great company, but I chose Microsoft for now. And today I wanted another utility apart from PPL, and I feel like Duke is one of the best energy companies to buy. In this market pullback, it felt like a decent time to open a position. So I picked up 3 shares of Duke at $80.24. So that's the quick Robinhood portfolio update, and that's my prediction as to why I believe we saw a bottom in the stock market. Let me know what you guys think down in the comment section below. Are things gonna get a lot worse? Have investors mispriced the systemic risk? Or is 38% decline in a month an appropriate way to price this pandemic on the markets? I hope so. I could be wrong, and just know that all of this is not financial advice. These are just my opinions. This is what I do with my own money. You know, if you're looking for financial advice, I always suggest please, see a professional. I'm not a professional. I'm just a guy that talks to a camera on the internet for entertainment purposes only. But as always, thank you so much for watching. Subscribe if you're not already. Thumbs up, and I'll see you in my next one.